All right, folks, buckle up for today's episode of PhatBear Pod. I'm your host, PB. First, let's talk about Bitcoin's recent tumble. January 20th, Trump's big inauguration. Bitcoin's pumped to new all-time high of 109K. Everyone's popping champagne, tweeting about Lambos. Fast forward to last week, and boom, price drops to 77K. Welcome to the second deepest pullback of the so-called bull run. 921 millions just waltzed out the door for the ETF over 4 trading days. That's right, the institutions aren't buying. They're running for the hills. Meanwhile, Bitcoin's at this crucial inflection point. Fancy words for we're all guessing what happens next. See, the bigwigs, your institutions, your ETFs, your governments, have been strutting in, promising bigger demand and shallower dips. The 30% correction says they're just as ready to dump as anyone else. Let's not forget the little guys, the shrimps, your typical retail with less than 1 BTC. These poor saps are selling at a loss faster than you can say hodl. But now, Bitcoin's clawing its way back, settling around 86K last night. That's a solid bounce from last week's dumpster fire, and the vibes are shifting. Market watchers are pointing fingers at the Fed's March 19th meeting. Rates didn't budge, but the Fed are hinting at 2 possible rate cuts by the end of the year. Trump's set to speak at the Digital Asset Summit in NYC today, probably tossing some green candles to the crypto crowd. Meanwhile, North Carolina's lawmakers are flirting with a bill to let state funds hodl up to 10% in BTC. Public institutions are catching the fever, with spot ETFs raking in 209 millions on March 18th, and whispers of them buying 1.5 million BTC. By 2026, the suits might just be warming up to hoarding some digital gold. Let's now pivot to Econ Central, where we unpack the U.S. economy with all the enthusiasm of someone in line at the grocery store deciding whether to buy eggs. Those little golden orbs jumped 10% thanks to some bird flu drama, and they're up 59% over the past year. So, inflation in February decided to play it cool, inching up a measly 0.2%. The smallest hop since October 2024. Housing costs are strutting up 0.3%. Because who doesn't love paying more for rent? But don't worry, the economy balanced it out with a 4% drop in airline fares. Yep, turns out nobody's flying when the economy's got everyone clutching their wallets tight. We also got more tariffs news, because nothing screams stable economy like slapping a 20% tax on Chinese goods and a 25% hit on Canada and Mexico. Meanwhile, steel and aluminum tariffs went global, and Europe's already sharpening its retaliation pitchforks. So, where's the Federal Reserve in all this? February's slowdown gives them a hot minute to keep interest rates steady. For now, they're playing it cool. They announced in the recent FOMC that they plan to cut back on QD by the end of 2025. But the clock's ticking, and the trade tension time bomb is very much live. Let's go over some crypto news next. First up, the ETH staking ETF drama. The Cboe BZX exchange is out here playing matchmaker, proposing to let the Fidelity Ethereum fund get in on some staking action. An extra 3 to 4% annual reward just for parking your ETH in the right spot. Sounds like a sweet deal for institutions. But hold your horses. Remember the SEC with their staking crackdown days? Yeah, they're not exactly rolling out the welcome mat yet. Senator Cynthia Lummis is back again with her Bitcoin Act, reintroduced with all the swagger of a cowboy riding into town. She's pitching a strategic Bitcoin reserve, 1 million BTC, locked up in fancy government vaults, no taxpayer tears shed. But not everyone's popping the champagne. Critics are screaming, this doesn't jive with the banks. Where are the laser eyes in support of this? And finally, Strategy, formerly MicroStrategy, dropped a $21 billion ATM offering bomb. Some fancy 8% series of perpetual strike preferred stock. Translation? More cash to fuel their Bitcoin obsession. They're sitting on nearly 500,000 BTC now. We're the cool $42 billion. When the news hit, Bitcoin prices did a little happy dance. Because who doesn't love a whale flexing its fins? Next up, I got some spicy DeFi news. First up is Mantle Yapper leaderboard. 150K MNT is up for grabs across 3 phases. And if you've got a knack for yapping, this is your shot. And rumor has it some fancy boys PFPs might sneak into the prize pool for the diehards. Let's break it down. Mantle's Yapper leaderboard has been live on Kaido, and the community's been churning out content like it's a yapathon. Now, they're cranking it up a notch with $50,000 MNT per phase. Step 1. Yap your heart out about Mantle. We're talking quality posts on X, none of that spammy nonsense. They've even tossed out some hot topics to chew on, Mantle and MNT opportunities. Function BTC's glow-up rebrand, Meth Yield Dreams, or Mantle's network architecture. Pick your poison and start yapping. Next, we're diving into Crypto.com's latest stunt, ramrodding a proposal to mint 70 billion Crow tokens, undoing a 2021 burn meant to keep them gone forever. The vote, running March 2nd to 16th, was a nail-biter. Yes, barely led numbers. Then bam, Sunday at 2 p.m. UTC, 3.35 billion Crow votes from Crypto.com's own validators flooded in, flipping the script to 61% yes. And just like that, the burn's toast. Crow holders are fuming. Trust out the window. One big player on Telegram griped. They pushed their vote to the last minute, warning this could set a shady precedent. With Crypto.com controlling 70 to 80% of the voting power, their late serves from validators like Electron and Antares drown out the 78% of validators who said no. The Kronos upgrade to mint those tokens drops on March 19th, and the community's left picking up the pieces. Lastly, some sneaky hackers slipped into secure dashboard the AI XBT autonomous system. They queued up 2 malicious replies and poof, 55 ETH vanished from a simulacrum wallet. That's about 100K worth of Ether, gone in a flash. But don't worry, the AI XBT crew's out here saying, chill fam, core systems are untouched, development's fine, no biggie. Apparently, this was an AI meltdown. Their bots got strong safeguards, they swear. Just a dashboard whoopsie. So what's the aftermath? They've migrated servers, swapped keys, slammed the dashboard door shuffer upgrades, and snitched on the hackers' addresses to exchanges. The AI and X account? Still kicking, no harm done. It's like they're saying, yeah, we got robbed, but at least the house is still here. We're wrapping up today with the Wayfinder Airdrop, because free crypto is the only thing everyone still loves. Wayfinder, whipped up by the Parallel TCG squad, is your omni-chain AI sidekick, smoothing out crypto's rough edges like a blockchain butler, moving assets, deploying contracts, running analytics, all while you kick back. They're tossing out 41% of Prompt's 1 billion supply. Pure community catnip. Snag 1% just by signing up, verify, wallet up, done. Another 1% if you crush all the missions. Community, link your X and interact with Wayfinder. Wallet, drop $10 on 2 chains, Base and Solana, with 4 optional chains. And referral, spam your buddies with that link. The real jackpot? Stake Prime for the fat 39% slice. Buy it, lock it. Stack those rewards longer for more. Phase 1's a points grind. Phase 2 brings a prompt token drop. If AI's heating up, Wayfinder's poised to be the coolest kid on the block. That's it for today's PhatBear Pod. I'm your host, PB. Catch you next time.